Why I wish I had bought and held one property every year. So a few years back, I totally misjudged the market, and it's cost me literally millions of dollars. So let me show you what I would do differently if I could go back 10 years. I went through the 2008 real estate crisis or real estate meltdown or whatever you want to call that. And with going through that, it made me a little bit skittish on buying some more properties. And so about 5 years ago, my mom sold the property, did a 1031 exchange. She bought a townhouse. I think she bought it for around $350,000. My wife, who's a real estate broker, started the company, super smart, said, hey, we should buy one too. And I'm like, no way. Are you crazy? This is the height of the market. It's not going to go any higher than that. We're going to be buying too high. And so we didn't. Well, guess what happened? That property is probably now worth at least double what she paid for it. So what I want to talk about is this idea of dollar cost averaging. Basically what happens, this is used a lot in stocks where it's like, hey, we're just gonna buy every single month. Let's say it's the price of gold and we're gonna say, I'm just gonna buy every single month and then I'm gonna average out what I paid for it. I'm gonna say that's my average in each ounce of gold I have or whatever the case is. We can do that same thing with real estate if we're buying on an annual basis. So let me show you the charts here. Over the last 10 years, if I would have bought properties every single year, let's talk about this. I'm gonna make a chart. We're gonna follow through this. Okay, so 2012, I would have bought the property for $238,000. 2013, I would have bought the property for $258,000. 2014, I would have bought a property for $275,000. Now these are just national averages for the entire United States, but this will give us a really good feel. 2015, I would have paid $289. You see how the price is going up? And I'm like, hey, guess what, guys? This is higher than it's ever been before. You can see back in the 2008 where that was. And it's like, oh boy, okay. 2016, property would have been $299. 2017, I would have been $313. 2018, I would have been $331. 19, I would have been $322, a little bit of a dip there. 2020, I would have been $329,000. And of course, 2021, depends on when you bought it, but let's just say $369,000. Property a year for 10 years. And today's prices are I'm gonna use a different marker for this so we can see it, $428,000. First off, some people say, how can you buy a property every single year? Well, it's actually not that hard. If you have a job and you have income and you get a tenant in the property, that income actually acts as income to you and it will help offset or completely offset the amount that you're paying on the mortgage, which is why the bank will give you another mortgage. And funny enough, you can typically get 10 homes just in your personal name. Well, it may be 5 now with the Fannie Mae, Freddie Mac. I can't remember what it was. It used to be 10 though. So I could go and get 10. And we actually did this kind of strategically because I went and got 10 in my name and my wife went and got 10 in her name. Now, we did this early on though. All of this we did before the 2008. And honestly, I think I just got scared. So you can see here, this is the 2000, this is the 2006, 2000, there's the drop right there. So 2008, let's call it. So up to that time, the previous years, I had been buying properties. You know, I've been buying a lot of properties, but then this happened, which now if you put on the big scale is like not a big deal. By the way, the height here to the drop there is about 20%. You can see that's $257,000 and that's like $208,000, a little less than 20%. So that's something to keep in mind. The biggest drop we've ever seen in real estate has been, the other one was right here, 126 down to 121. You've got these little ones, but that's the biggest drop we've seen. You know, you saw a little bit of a drop here, 2020, you got the COVID drop there, but then you can see it just skyrocketed afterwards. So let's look at this, guys. How much would my dollar cost average be on these properties that I bought? So what I'm gonna do is I'm gonna add up each one of these, and then I'm gonna divide it by, is it 10 or let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Perfect. So then we're going to divide it by 10, which is exactly what we were trying to do. And that's going to say, hey, that's our dollar cost average into these houses, okay? So let's get my handy dandy calculator. We're going to go 238. We're going to go 258. We're going to go 275. We're going to go 289. We're going to go 299. We're going to go 313. We're going to go 331. We're going to go 321. Or it should be 22, but that's okay. 329. We're going to go 369. So we've got $3 million, a little over $3 million in real estate. Okay, that's how much we bought the properties for. That was the purchase price. Okay. Now, those same properties are worth $4,280,000. So I've got an appreciated gain of $1.28 million over the 10-year period. Property a year, every 10 years, regardless of the market, okay? So, but it gets better. This is something that a lot of people just don't realize is not only is the tenant paying every single month, they're also paying down your mortgage. So guys, let's just say you broke even. Let's say you didn't make any money. You bought a property a year, and 10 years later, you had $1.2 million. Well, but hang on a second, it gets a little better than this. So we have to talk about what's called an amortization schedule. So we got this amortization schedule, right? That first property that I bought was for $238,000. 30 years, that was in 2012. So let's look up, what was the average interest rate in 2012? 3.66. We're going to bring that over here and say 3.66. We're going to calculate that, and we're going to show the amortization. So I bought that for $238, and let's just say 10 years later, I would owe $187,000 on that property. Okay, let's get another color here. 187. The next property I would have had for 9 years, $258,000. I'm going to owe $211 on that property. And guess who's been paying this down? Not me, the tenant has. The tenant's been making those payments for me. Okay, and then I'm buying in 2014. What's the rate in 2014? And in 2014, I bought the house for $275. You know, I'm going to just get rid of these on my whiteboard so we can get a better feel. 211. Okay, so I would have had this one for 7 years. I'd owe $237 on that one. In 2015, the rates were 3.85. The rates in 2016 were, the average rate, interest rate for the house, 3.65%. 3.65. We're going to calculate that, and the purchase price of that one, because prices went up, $289,000. Calculate it, and amortization. So this one we've got 7 years left on this one. I think I did that one a little too early, but we'll just leave it for conversation's sake. So we're looking at 29. I'm going to owe $245,000 on that one. You can see as the closer we're getting, the less equity we have, because that one's getting paid down for 10 years, 9 years, 7 years, 6 years, 5, right? So each one we get a little closer, it's not paying down as much. With this one, I owed $238 and I now owe $187, right? Let's keep this going so you get the idea here. Okay, 2017, 3.99. And every year I'm paying a little bit more for the property too, right? So it's $313,000 is what I'm paying for this property in 2017. We're just assuming that they're all similar properties. You know, we're just using that just to make it as simple as possible with this. Now I've got I've got 5 years on that one. So we're going to take this down to 27, and I'm going to owe about $282,000 on that. Now we're going to buy another property in 2018. And rates are 4.5. And let's see, I'm going to have that one for 2019. I'm going to buy a house. 2019's rates were 3.94. And what are we buying it for that year? $322,000. Every year I'm paying more for the property, and you can see interest rates are fluctuating up and down as well. Let's see, I've got 3 years on this one. So we're going to say I owe 303 on this one. 2020, interest rates were 3.1. My price was going to be 329. Calculate that up, and I've only got 2 years on that one, so I'm going to go from 22 to 24. Let's get to June. I'm going to owe 314. Jump back to the whiteboard. I want to make sure we're on the same page. Okay? Every year I bought a property for 10 years. You can see property values went up 238, 258, 275, 289, 299, 313, 331, 332, 329, 369. And also I use the interest rates, which were going up and down depending upon when you actually purchased the property. So if you would have made every payment, this is how much you would owe on these properties. You owe this amount that's here. So let's get an idea of how much would have you owed on the properties. Okay, so we're gonna take this and we're gonna go 187 plus 211 plus 237 plus 245 plus 263 plus 282 plus 291 plus 303 plus 314 plus 369. So we would owe $2.7 million. Keep in mind, we just barely bought this one. So what has that done? It's given us an additional $300,000. So if I could sell 4280 and I owe 2.7, I've got 1.580 is what I'd make. Basically, I'm going to make $1.6 million. Let's say just for number's sake. Okay. But then you're going to say, well, man, what do I do with that money? Well, let me tell you what you could do with that money. You could take some of that money and pay off your personal house. And you could take some of that money and pay off some other properties or pay down some other properties, or you could take some of that money and reinvest in some other properties. I don't necessarily think selling properties is a good idea. I think you should hold on to them, but whether you sell them or whether you hold on to them, you're looking at about $1.6 million that you've made over the market time period from 2012 to 2022 that you would have made if you would have bought a property every single year. So in the end, this would have added $1.6 million to my net worth, but I didn't because I kept thinking the market was going to correct. Now, what does this mean going forward? Well, we think we're going to start buying a property a year. Good, bad, or ugly, because we've seen the graphs show that real estate just always goes up. And the worst part that we've seen is a 20% reduction. Like that is the height of the market before this new spike that we're on. Okay, 257,000. Let's look and say, how much did that go down? $257,000, and it goes down to, this is the buying at the peak of the market would have been 257. And it goes down to 208. Okay, so what's the difference? 257, right? Okay, so 257 minus 208 equals $49,000. If I take that and divide it by the 257, so it went down about 19%. So basically, the worst case that we've seen is about a 19% correction, but we've also seen since that time that values just keep going up. At some point, will values go down? Probably. But if you look at it on a 10-year perspective and you're able to wait out, even if you have a 19% downturn, in the end, you're going to be really happy and your pocketbook will thank you. How I repeatedly find motivated sellers for fix and flips. I put a video together that covers this. It goes through the first few steps in getting into real estate investing. If you can't find sellers, you're not a real investor. And I show you how I target the right properties with the right owners over and over again. Check out this video and make it a very profitable day.